Okay, Pelicans, this is Chess and Wine here. It is Thursday, December 2nd, 2010. Let's do this intraday update. Here, the indices, once again, the S&P 500 is screaming higher for the second day in a row here. You can see on the daily chart, we broke out of this, you could have called it a descending triangle here, and many people were looking for the bearish breakdown. Obviously, that didn't happen. We bounced off the rising 50-day moving average a couple times. And now all of a sudden in the past 2 days, we've quickly recaptured the 20-day moving average. And now all of a sudden today, actually if you look right now at the time of this video, we're printing 1219 on the S&P, which actually, if you recall, marked those highs from last April, which is this upper pink line here. Now, even though we went ahead and broke them to the upside here, earlier in November, we went up to 1227. It wouldn't surprise me to see a little bit of churning here. But, I mean, these are two very, if we close out the day at or near where we are right now, we're going to have two very bullish candles in a row. That's known as marabozos in Japanese candlestick lingo here. It just means there's an awful lot of demand for stock, obviously relative to supply. So that's two very bullish candlesticks here, especially coming out, like I said, of this, out of this pattern. You always want to put the pieces together. If you look at it just in a vacuum, you would say, well, this is a very bearish pattern. But the reason why I kind of resisted talking about it while we were going through this as a descending triangle is because I think you always want to be, in technical analysis, you always want to kind of put the picture together, and you always want to look at the broad perspective. And what's really happening is we're still in this overarching uptrend really since September, and we still have got these rising moving averages. You can see down here at the bottom of the screen, the longer term moving averages are starting to torque up now. The 100-day moving average is really inclining now. So the overarching uptrend is still intact, and I think that what we saw during the month of November was a much needed correction followed by a much needed consolidation. It kind of filled out the chart. In other words, think about a high school sophomore who's maybe 5'4" and weighs 110 pounds, and then then he shoots up to 6'2", but he only gains maybe 15 pounds. So he's very tall, very skinny. That's kind of what we had here coming into the elections, and then that he needs to fill out. He needs to just fill out. It's not necessarily a bad thing. He just needs to kind of fill out his frame because it was just too much too soon, and that's kind of what we saw in November. And I think the idea is based on these 2 days, especially today, that we're kind of getting the follow through to the upside, and I think now we filled out the frame, and now we can kind of move on with things. Obviously, this area is going to be a very key resistance area from 1219 all the way up through 1227. So let's really keep an eye on that 1219 through 1227. As I've been noting, really, for as long as I've been blogging, is that you always have to watch the transportation stocks. I mean, this is as bullish a chart as could be. Okay, we've had a sharp run up, a nice rounded period of consolidation, very orderly here, and now look at these two candles. I mean, this is almost a thing of beauty. So you always have to watch the transportation stocks and the small caps stocks, the Russell 2000. Again, another thing of beauty here, breaking out just above prior 52-week highs here. So we have some very bullish charts. We are seeing some give back in the leaders today. I think that should not really be a surprise. I mean, our leaders really aren't leading, I guess, today. I think we are seeing a nice little rotation over to some laggards, maybe to some commodity names. I think that's what you want to see. In other words, you want to see money come out of the extended names, and go into some of the names that aren't too extended. I mean, would you chase a name like Decker's right now? No, I wouldn't. That's probably why it's down today. We're seeing some healthy profit taking, but that money can roll over and go to some of the names that are setting up behind them or aren't quite as extended.